Okay, welcome guys. This is Keishel speaking. I'm a trader here at Loft and I do the signals and the webinars. So if you can hear me clearly, please drop something in the chat so that I know and that you can see my screen clearly. All right, so today's webinar is going to be on multiple time frame analysis, and we're just going to go through the charts and probably go through a few trades or answer some of your questions, and we can get to work on that. Okay, so let's see here. I'm gonna just type this out. What are we doing today, right? Multiple time frame analysis. One of the most important confluences when trading. With this confluence, basically, you want to know what the market is doing on every time frame, because some time frames has a bigger influence on the market, and you also want to know what phase the market is in on every time frame, right? So generally speaking, on the higher time frames, the higher time frames would have a bigger influence on the market, and different time frames have different trends. So you might find an uptrend on a 4-hour time frame, and then on the 1-hour time frame, you'll find a downtrend, right? So there are different market phases on the different time frames. Okay, so you as a trader need to know what phase the market is in on which time frame, so you can make the right trading decision, right? So let's get straight to it. Let's start with a monthly, right? So whenever you're trading, you want to do a top-down analysis. Basically, you want to know what every time frame is doing, right? One sec. All right, so you help many makers. Let's start on a monthly, right? Thank you for joining us, Rich. We're doing multiple time frame analysis. So basically, when you're trading, you would hop on the monthly, then the weekly, then the daily, then the 4-hour, then the 1-hour, before you make a trading decision, because you'd like to know which direction, which time frames are trending. Because let me tell you why. Sometimes you might find a trade with, let's say the monthly time frame is up, then the weekly time frame is up, right? And the daily time frame is up, meaning that these time frames are trending up. And then you find a 4-hour time frame that's trending down, right? Now you might think that you can place a trade, a short trade, a sell, and it's going to be high probability. However, that trade will be very low probability because all the other time frames are going the other direction. To find the best probability trades, most time frames need to be aligned. right? The more time frame that's aligned in your direction, the higher probability of that trade working out, right? So I'll show you an example. Let's say you wake up one morning and you come to your charts. First thing you want to do is do top-down analysis from the higher time frame come down, right? So you'd start from the monthly, and if you know your market structure, you can see that the monthly time frame is certainly in a downtrend, right? So just off the bat, you know that the monthly time frame, the highest time frame, is in a downtrend, right? I'm gonna just label what we're doing for those of you who are just joining us. Well, you know what I meant to say. Analysis, right? So like I was saying, when you place a trade, you want all the time frames or most time frames aligned with the direction you want the trade to go. So if the monthly, weekly, daily is trending down, you know that short trades are in or high probability trades. Short trades are the trades that's gonna work out, right? So, like I said before, when you hop on NZD USD, you can clearly see that the market is trending down on NZD USD on the monthly time frame. You kindly take note of that, right? Just so you're aware, right? So I'm gonna erase this and I'm gonna drop this right here and let's see monthly, right? Just to keep notes. So then we hop on the weekly chart now and we just have a look and see what is the weekly time frame telling us. The weekly time frame is telling us that we are in a weekly downtrend, right? So far we have two time frames pointing bearish. All right. So now we hop onto the daily because remember, we are assessing the trend on every time frame, right? Because we want to know what's the highest probability direction the market is going. A pullback on the 4 hour, no, an uptrend on the 4 hour could simply be a pullback on the daily time frame, right? So now that we're on the daily, we can see that yes, the daily is definitely in an uptrend, right? Right, so let's just mark this down. The daily uptrend. And for those of you just joining us, you got nothing to worry about because these webinars are recorded, so you can watch them later on. Okay. So top-down analysis again. So from this 3 time frame assessment, 3 time frames, multiple time frame analysis, what have we gathered? We gathered 1, the monthly time frame is trending down. 2, the weekly time frame is trending down. 3, the daily time frame is trending up. What does that mean? That means that this move up right here, this daily trend up, it's simply a pullback in the bigger scheme of things. So we know that from a long-term perspective, NZD, USD is bearish. But from a short-term perspective, it is bullish. The market moves, push and pulls, zigzags. It pushes, it pulls back, right? Impulses and corrective moves. So we know that the trend is down on the higher time frame. The daily trend is up. The daily time frame is simply a pullback. We know that the bigger move is going to be down, right? According to the rules. So what we would expect? We would expect that the market to continue down to make its lower low because it's trending down on the higher time frame, right? So having this information that we've gathered from multiple time frame analysis, we can now look and observe on the daily time frame and wait for a reversal signal for us to enter this trade long term to the downside, right? We know based on the rules that this is the monthly and weekly lower high, right? So if the market was to keep its downtrend structure, it would not surpass this high. So we also know that we have from this area to look for reversal signals. As long as it passes this line, then the trend is no longer down. But as long as it's under 67 point, 0.679, then we're still in a downtrend, right? So that is multiple time frame analysis. We can go lower in the time frames, but we know that, okay, weekly and monthly is down, daily is up. We know the daily is just a pullback because the higher time frame is going down. So then we can look for shorts. We add in a few other confluences. Let's say we add a trend line, right? Simple trend line. And then we can say, okay, we will look for shorts once the market reaches the trend line zone, right? Just a simple confluence that you can use to find an entry, or you look for like a reversal signal, right? Or we can even add in a Fibonacci for those traders who have been in my past webinars. I've taught trend lines and I've taught the real way to use Fibonacci, right? So we already have two confluences within this green zone to go short, right? 61.8 golden ratio Fibonacci, trend line just above, right? So we know this area is a short, is a short zone. And yes, this is the higher time frame. So this would be a long-term trade. Whenever I send signals and whenever I place trades, most of those trades are long-term trades. You hold them for a few days, maybe a week or two, to catch hundreds of pips. For those of you who've been with Lines of Forex for the month of November, if you recognize my chart, then you recognize the trades I've been sending out, and you recognize that we hold these trades for days. We hold these trades for hundreds of pips, right? So let's hop on down to the 4-hour just to see if we can find some more confluences to enter short, right? Okay, so I'm gonna remove this. I'll remove this. And let's use the channel, right? Because price tends to move in a channel sometimes, right? To draw a channel, you just simply connect the two lower highs. And once it connects to two higher highs, then you have a channel, right? The idea of a channel is you can go short from the trend line above, or you can go long from the trend line below. And for those of you just joining us, we were doing multiple time frame analysis. We already covered most of it, and we're just going through a few confluences that align with what we just learned, right? But the webinar is recorded, and as soon as the recording is available, I'll make it available to you, right? Because this was a very valuable webinar right here. So, back to the chart, right? Let's add up the reasons why we could go short in this green zone, right? One, the monthly trend is down. The weekly trend is down. The daily trend is simply a pullback on the monthly and weekly trend, right? This is a monthly, and this is the pullback. This is the weekly trend down. This is the pullback, right? But on the daily, it looks like it's trending up because it's making higher highs and higher lows, right? But of course, we are expecting for the monthly and weekly time frame bearish structure to take back control, right? And then we also have, so that's a couple of reasons. And then we also have the Fibonacci, and then we also have this monthly trend line, right? And then that's, so basically, we have confluence on the monthly time frame. We have confluence on the weekly time frame. We have confluence on the daily time frame because we are aware of what these time frames are doing. And now we have confluence on the 4 hour time frame because here we can see that we have a 4 hour channel and the market reacted off the top of the channel. Now the market didn't just react for no reason, right? Yeah, so the market didn't just react for no reason, right? The market reacted at the top of here because that's the top of the channel. All right, so let's see. I think I have this. Is this it? No. I had a NZD USD set up. I had it in my browser just a while ago. It was like this. Took a short from the top of this channel. Go down. This was a target down here, right? And right now it's actually, because I cleared the chart at the beginning of the video, you would see it, but because I cleared the chart, the markup isn't there anymore, but it's 26 pips in profit, right? So, I mean, if anybody hopped in this trade with me, I'm not sure if I posted it, you can go break even. But yeah, that's multiple time frame analysis. That was, we mostly covered the higher time frames, but if you have any questions, I know some of you guys joined us late, but we have the webinar recorded, and this was a very valuable webinar. If you have any questions, drop them in the chat, and I'll take care of them. But all for now, this was a lesson on multiple time frame analysis. If you want me to go over anything, you want me to do another pair, I'll do it. I'm gonna wait 1 minute for a question. You guys can someone could at least ask one question before I hop off.
Yeah. Hello, you hear me?
I can hear you.
You hear me?
Yeah, I can hear you.
Alright. I just come onto the webinar. Kind of late. I don't know if you mind like going over another page and just doing everything,
Quick.
just going over everything quickly.
Okay, of course.
Alright, cool. Thanks.
And then someone wants me to show them S&P 500, USDJPY, and Australian NZD, of course. Okay, Andrew, I will start from the beginning, right? So I was saying multiple time frame analysis, meaning you know what the market is doing on every single time frame, right? The monthly come down. The higher time frame has more influence on the market, right? Meaning the higher time frame has more control, so you should always go with what the higher time frame is doing, right? So if we hop on the monthly chart, just using simple market structure on some of the most recent price action, what can we see the market doing on a monthly? The market is trending down, right? High, low, high, lower high, lower low, lower high, lower low, lower high, lower low, right? Or this could be counted as one move, right? So we know that monthly is down, right? So now we hop on a weekly, and then we can see that the weekly time frame is trending down, making lower lows and lower highs, right? So we hop on the daily now. Let's just update this. So we can see that, okay, we know the weekly, monthly is trending down, weekly is trending down, but the daily is trending up. It is making higher highs and higher lows. So we know that in the grand scheme of things, the weekly and the monthly time frame is trending down. So if this is the impulse on the monthly and the weekly time frame, right? If we know that if this is the impulse on the monthly and the weekly time frame, then obviously on the monthly and the weekly time frame, this daily uptrend is simply a pull back, right? If we look on the weekly time frame, we would see that this is simply a pullback, right? Unless it surpasses this high. So having that information, we know that the market has to eventually turn bearish to continue the weekly and monthly trend, right? So we don't get caught up in the daily uptrend. We want to make money, so we want to go with the bigger trend, right? The higher time frame, right? So we know that even though this is a daily uptrend, we're going to be looking for shorts because the higher time frame is going down, right? So we know that we have up until this level to find a short, because if the market surpasses, if the market breaks this high, then it would have made a higher high on the monthly and weekly time frame, and therefore the downtrend would be invalid, right? So having this information, we can now look for confluences to find what is the best price to go short at, right? One of the confluences we would use that I've taught before would be Fibonacci, 61.8 level, right? Okay, so this Fibonacci is telling us that we can go short somewhere in this area near the 61.8, right? Then we can draw a higher time frame trend line to see where the market comes near it. So we know that, okay, we have a high time frame trend line, we have a Fibonacci level. So around this area would be the shorting area, right? So we simply look for a reversal pattern. We know that this is the high time frame trend line, so we can expect a bounce or price to come near it, right? So we have confluence on monthly, we have confluence on weekly, we have confluence on daily. We hop on the 4 hour, and on the 4 hour, we can add a channel, right? I explained what was a channel earlier. You simply connect the lower highs, like if you're drawing a trend line, and you look to see if the higher highs connect. If the higher highs connect, then we have a channel, and we can look for a bounce from the top or the bottom of the channel, right? So we have a channel, and price hit the 61.8 level right at the top of the channel. So that was enough confidence to go short, which I did. I had the chart marked up in the beginning, but I cleared it out. And this short trade was about 24 pips so far, break even, and it's going to be held for a target of 139 pips. And that was a quick walkthrough of what we did. Let me grab my computer charger real quick. Just give me 1 second. Oh wow, I didn't even know there's like a time limit on this. Okay, so oh, okay. So now we're gonna go over we're gonna go over S&P 500. Someone asked for that. Actually, I have it somewhere. No, that's not it. This is a mess. Okay, there it is. Okay, so I mean the S&P 500 top 500 companies is at all-time highs. So multiple time frame analysis. Basically, the trend just been going up, right? You can draw a trend line on the monthly. We can draw a trend line on the weekly, on the daily, can draw a trend line here. Well, trend line is going to look more like this because this was a swing high. So we can see that the S&P 500 broke a trend line, right? It broke market structure, creating a bearish structure. The reason is the market's been trending here, high, lower high, high, and then it made a lower low, right? Now, once the structure has been broken, that time frame is now bearish, right? So what can we expect? Well, if the daily time frame goes bearish, then it's probably a pullback, right? Just like we did in NZD USD to align with the higher time frame, right? So we can expect a short-term pullback on this pair right here, right? Let's go over AUD, and ZD. Someone asked me about that. Where are you, AUD and ZD? Okay, so on the monthly time frame, let's see, on the monthly time frame, we had a bearish structure, right? And then we had a break of structure, meaning the market made a low, made a lower high, made a low, then it made a high, and then it made a higher low, and then made a higher high, right? So on the monthly chart, we can see that it is bullish, right? We can also probably plug in a channel here to see if it aligns. All right, so we do have a monthly channel. Up and down to the weekly, as you can see, this is why I have this arrow here, because I know that the higher time frame is bullish, right? So we can look for longs up until this price right here, right? So basically, once the market breaks this level, then it's no longer bullish, right? So we hop onto the daily. As you can see, I have a setup here. I don't know if I posted it in the chat as yet, but the price is nearing that level. Basically, there are several confluences pointing to going long from this level here, including this trend line and several other methods that I've taught before, right? So that is top-down analysis on Aussie NZD. Oh yes, I did post this setup in the group chat. I said it would be a very slow moving pair. This pair moves very slow, so you need to have patience with it. We have 4 minutes left. Let me check the chat to see. And USDJPY. Top-down analysis. Let me clear this up. We're just using what we learned today, right? Top-down analysis. We can see that the monthly time frame is down, right? Monthly is down. Weekly seems to be going up, right? So for the first time, we've met a pair which monthly and weekly time frame is not aligned. How do you deal with swap fees? Well, some pairs pay you a positive swap, and depends on your broker. You know, the swap won't be as much. There are brokers that doesn't have swaps. Most long-term traders have Islamic accounts. So basically, when they sign up to the broker, they basically just say that they are Islamic and that the broker doesn't charge them a swap. But once you're in the right direction, the pips generally cover the swap, right? Daily time frame is up. So we have monthly down, weekly up, daily up, right? 2 time frames up. Basically, we're gonna go with the 2 time frames that's pointing up, right? So, I'm sorry guys, but it says I have 1 minute left. So it was a great session. Catch me on the next webinar, right? I'm Keishel Gibbs, and it was great having you guys. I'm gonna do another webinar tomorrow. Maybe we can finish up on this. And good luck trading, everyone. Good luck trading.